Sounds like you also don't like the term of market sell-off. In your view, all that's happened is that a few extremely high-flying players have been corrected, the ones that were contributing a lot to the overall indices.
Yeah, I mean, when you strip out the activity in Apple, Microsoft, Amazon, Facebook, just those four names, it's such a big percentage of the move in the NASDAQ and, frankly, the move in the S&P that, you need to look, I think investors need to look a little bit more carefully at what's actually happening in the underlying names, before you rush to judgment that this was that the run-up was real and that the sell-off is real. It's just, it's a bunch of really big cap names and cap-weighted indices that are driving the overall index, but it's not really impacting what's happening below the surface that much.
Right. So as we get back to school, we get some banks and other businesses bringing back employees, movie theaters open. I mean, how many catalysts do we really need to see the market truly broaden out?
Well, I certainly think, look, we've been so laser focused on the vaccine. When's the vaccine going to come, and when are things going to get back to normal? And that is, I would say, that's human, right? We all want to go back to the way it used to be. I have never been a believer that we're going to go back to the way it used to be exactly. And so what we're doing is we're adapting as humans, right? We're doing the things that we need to do, either because we have to or because we need to create that social engagement in person in a respectful way. And so what you're seeing is the economic activity off the back of that, where people are out and about and figuring out a way to navigate and maybe take a little bit more risk with themselves personally, is very normal and expected. And so the economic activity that we're seeing and the regrowth in some of the, of the stocks that maybe aren't just the stay-at-home stocks is a function of the fact that it isn't as bad as everybody thought it was going to be, because humans and consumers adapt.
Jeffrey, I want to go back to a point that you started with, because we had a lot of these big mega cap stocks, a lot of them tech stocks that ran up big, and we were excited. Boy, look at the markets are running up big. And then those big names tank somewhat big, not as big as they ran up, but it looks, when you're looking at the indices, like something really big is happening. Where can we look if we can't even look at the S&P 500 anymore for a sense of what's happening broadly with stocks to sort of, to some degree, sort of cancel out the mega cap effect?
Yeah, so what we tell investors, and actually what we hear from our institutional investors, which is primarily where we focus as the professional investor, you need to look at long-term trends and how those trends play out. You may garner returns in a relatively short amount of time because the market catches up to where your views are. But at the end of the day, if you're not playing long-term trends like mobility, like the growth in artificial intelligence, like sustainability, like electric vehicles, like these are things that are going to last well into the next, decade plus. And so if you're focused on those areas just below the big indices, you can actually make a fair amount of money at identifying stocks that are likely to do well, even beyond what's happening in the immediacy of the virus. And I think that you can look at stocks in those industries regardless of what the political outcomes are going to be in November. Because at the end of the day, for example, 1 in 4 cars we project is going to be an electric vehicle by 2030. Now, think about all of the supply chain that has to be reconfigured, all the capital spending that has to go on in order to meet that. And it's not because the government has mandated, it's because what consumers want are electric vehicles. And so that is a key trend that doesn't have anything to do with the big 4 names I just mentioned specifically. It's a trend that's running in a bunch of different names in the S&P 500 or in the NASDAQ. You just got to look for them.